Leaving cash idle in your brokerage account means missing out on potential returns. That's why in this video, I'll be showing you all the different methods you can use to make your idle cash work harder on IBKR. But first, if you have not signed up for an Interactive Brokers account yet, what are you waiting for? IBKR offers one of the lowest trading fees, if not the lowest trading fees in the industry. For the US stock market, it charges just 35 cents per trade under IBKR Pro and even $0 with IBKR Lite. Plus, you have access to Ireland domicile ETFs, which will save you on dividend withholding taxes. It also comes with a suite of free research tools to help you make smarter investment decisions. So feel free to use my IBKR referral link to open your account today. Okay, by default, you'll be earning an interest on your idle cash balances. This feature is available automatically and you don't have to enable anything. So that's nice. Right now, it is giving an interest rate of up to 3.83% on your USD cash balance. The rate is tied to whatever is the reference benchmark for that currency. For example, currently the federal funds rate for the US dollar is 4.33%. So what IBKR does is take this rate, then minus off a small 0.5% spread to give you 3.83%. This is the interest that you will earn on your idle USD cash balance. However, in reality, you won't get to earn the full interest rate. That's because the balance on your first few $1,000s won't earn any interest. So for instance, for the US dollar, you will only earn an interest on balances above 10,000 US dollar. Likewise, for the Singapore dollar, you will only earn an interest on balances above 14,000 Singapore dollars. That's why if you have multiple accounts balances, say USD and SGD, it's best to consolidate your account balance to just one currency. That way, you are more likely to exceed the minimum threshold and actually earn an interest on your idle cash. Also, if you are on IBKR Lite, you will earn a slightly 0.5% lower interest as compared to IBKR Pro. And how do you know whether you're on IBKR Lite or IBKR Pro? Simple. Just open up your IBKR web portal. At the top, search for pricing plan and it will show you which account type you're on. And lastly, you will only earn the full interest if your account has more than 100,000 US dollars worth of net asset value. Otherwise, if your account has less than that, you will only earn a proportional rate. Again, you can easily check this by logging into your account and whatever number you see here is your net asset value. If that sounds confusing, don't worry. IBKR has provided us with an interest rate calculator to make this easier to find out how much you can realistically earn. So let's say you have 80,000 US dollars cash balance in your account. If your account's net asset value has more than 100,000 US dollars, you will earn the full interest rate on the amounts above 10,000 US dollars. So in this case, your effective interest rate is 3.351%. But let's say if the net asset value is at $50,000 instead, your effective interest rate drops by half. To check how much interest you have earned, in the website, click on Performance and Reports, Portfolio Analyst, Reports. Then generate a detailed report for the period that you are interested in. Look for interest and fees. And here, you will see the interest that you have received, as well as any margin interest that you have paid. Oh yeah, here's a fun fact. The interest is usually paid around the 5th of every month. Now, while IBKR's default interest is good, the reality is that it tends to be slightly lower compared to what you could earn elsewhere. So if you wish to boost your interest a little more, here are some alternatives that you can go for. The most obvious method is to simply park your money elsewhere, such as in a high-yield savings accounts or money market funds on other platforms. Then, whenever you are ready to invest, you can transfer the funds into IBKR. This approach is especially useful for Singapore dollar balances. That's because while IBKR pays a super low 0.6% on amounts above 14,000 Singapore dollar, local banks can offer far more attractive rates. For example, Standard Chartered's bonus saver account currently allows you to earn up to 5.55% interest on SGD deposits, which is significantly higher than what IBKR offers. This works because if you are on IBKR SG, you are able to use services like eGiro or PayNow to instantly transfer the funds into your IBKR accounts. However, for USD balances, this strategy may be less effective, since transfers from a USD bank account to IBKR can typically take anywhere from a few minutes to a few hours. This means you might risk missing going to the moon while waiting for your funds to arrive. And while you can use platforms like Wise to park USD and earn interest, the rate is only around 3.62%. And you still have to pay transfer fees each time you move money in and out. Because of that, for USD cash balances, A more practical approach is to park them into instruments that can offer higher yields. And one of the most straightforward options is money market funds. On IBKR, two of the most popular US money market funds are VUSXS and VMFXS, both currently yielding around 4.2%. VUSXS invests almost entirely in US Treasury bills, while VMFXS takes a slightly broader approach by holding a mix of repurchase agreements, agency securities, and Treasury bills. Despite these differences, both funds are very low risk. However, there are some key limitations. These two funds are only available to US residents, meaning non-US investors won't be able to buy them through IBKR. In addition, the minimum investment amount is $10,000, which may not be practical for everyone. Plus, the cost of investing in these funds is rather high. IBKR charges a commission of 3% of the trade value with a minimum of $14.95. This fee can significantly eat into your returns, making it less attractive unless you are investing a large sum and holding it for a reasonable period. Oh yeah, just in case you're wondering whether you can invest in some of the more popular money market funds in Singapore, such as Fullerton SGD Cash Fund, Lion Global SGD Money Market Fund, unfortunately, the answer is no. While you are able to find these funds in IBKR, sadly, as of making this video, you are not able to invest in them. Besides money market funds, another method is to park your USD cash balance into US T-bills. This method is good if you are planning to park your money for up to 12 months. But if you need to invest your money at any given moment, this may not be a good method. That's because even though you can sell your T-bills to get back your money, every trade will cost you $5, which is kind of expensive, yeah? Plus, you may end up losing a bit of money due to the wide bid-ask spread. But nevertheless, if you are interested in this method, you can check out this video here where I show you how to invest into US T-bills. Last but not least, you can go for either bond ETFs or money market ETFs. The benefit of this method is that the commissions are low and the minimum investment amount is very low too, since they are just normal ETFs. Here, I have two groups of ETFs. One that is domiciled in the US, another in Ireland. If you are US residents, you can simply stick with the US domicile options. All three US domicile ETFs give similar returns and have very little to no volatility. But if you want to nitpick, SGOV stands out with the lowest expense ratio of just 0.09% and the highest trading volume, which translates into tighter bid-ask spreads. As for non-US residents, things are a little more complicated. Technically, you can still invest in those US domicile ETFs, and since they invest in US Treasury bonds, the dividends are exempted from US dividend withholding tax. However, most brokers will still withhold 30% of the payouts upfront. The IRS will then refund you this amount the following year, typically between February and March. But in the meantime, your cash flow will take a small hit. The bigger issue, however, is the US estate tax. Non-US residents holding US domicile ETFs are subjected to 40% estate tax on assets above 60k when you pass away. Touch wood, This makes them far less attractive. This is why for non-US investors, it's generally better to go for Ireland domicile ETFs instead, as they allow you to avoid US estate tax. Among the Ireland domicile options, IB01 and VDST invest in US Treasuries, making them more conservative choices for investors who prioritize safety over yield. On the other hand, ERNA may offer a higher yield, but it comes with slightly higher volatility since it invests in short maturity corporate bonds instead of just treasuries. So if you're okay with higher volatility, you can invest in ERNA for the potential higher yield. Otherwise, it's best to just stick with IB01 and VDST where volatility is lower but yields are lower too. If you do decide to invest in these ETFs, you are able to sell anytime and immediately use the money to invest into stocks. However, if you are on IBKR cash account, you will need to be mindful of something called the free riding rule. Basically, when you sell security A, the proceeds are unsettled until the next trading day, aka T+2. Under the free riding rule, you are allowed to buy security B with those unsettled proceeds, but you cannot sell security B until A sales settles. If you sell security B before A settles, that's considered a cash account violation, and your account can be restricted to settle cash only for up to 90 days, meaning you won't be able to use any unsettled proceeds from a recent sale to make new purchases until those proceeds officially settle. So that was a quick video on where to park your idle cash balance in IBKR to earn a return. Hopefully you found it useful. Like, share and subscribe as I'll be posting new videos every week.